Good afternoon, everyone, and happy Friday. Welcome to the Daily Volatility Box Report for August 23rd, 2019. We are TOSindicators.com, home of the Volatility Box. In yesterday's nightly video, we made sure to talk about a handful of points that I think were really relevant today. The first was Friday being tricky and wonky to trade and to be extra cautious and protect any gains that you might have headed into the week. We didn't have any gains headed into the week. We were actually operating at a net loss of a little bit more than $400 for the week. And the second was to essentially understand that losses are part of the game and to continue to stick to your plan and trade the rules that you see. That's exactly how we approached today. We had a total of 11 trades that set up across all four of the indice markets. The S&P, the NASDAQ, and the Dow each gave us three setups, with one of these three setups all being losers and the other two being nice winners. And the Russell futures only gave us two setups in which one of them was a loser. However, all four of these indices let us end the day on a positive note in each market, allowing our end daily total to be a little shy of $5,000, bringing our weekly total up from a loss of a little bit more than $400 to a gain of $4,500. That's the power of using the volatility box and understanding and building a mindset, or developing a mindset rather, of knowing that each trade is not a trade on its own, but rather in a sequence of trades. So while yesterday you might have been a little upset, you might have been frustrated, you would have ended the day with losses, or at least we did, it's important to, once again, be disciplined, manage your emotions there, and follow the same rules and the setups today, which let us end the week on a winning note. Let's dive into charts and take a look at what happened. As usual, we'll start with the S&P futures chart, and we're on a 5-minute chart. And one thing we've done is we've turned off extended hours so that we were able to plot our supply-demand edge indicator, which many of you had emailed us requesting that we put back on our charts in our daily review. So whenever applicable, we'll have this on our charts, but that does require us to have extended hours turned off. Once again, if you're just joining us for the first time, this indicator is available for free for download on our website. I'll put a link in the description box below. Okay, so let's go ahead and approach this market the way we approach all of our markets every single day. We look at the first hour of trading activity, so up till 7 o'clock Pacific, and we check to see whether or not price action has breached either side of the aggressive volatility box's entry lines. In this case, it hadn't, which is our signal to continue to use the aggressive volatility box. Now, I think this is our most popular question that a handful of you email every day, and so we'll just clarify this in one video. But it's important to remember that in real time, the volatility box looks a little bit different than what it looks like looking back. And so all of our daily videos account for what it looks like in real time. But remember, as we make each new lower low or higher high, the volatility box shifts. So in this case, for example, as we continue to make higher highs here, the volatility box went from essentially being, if I can get a rectangle, went from being down here to essentially shifting up and slowly making its way up here. So with that, our first trade setup actually was a short right here, right with the hour open. We had plenty of time to actually get in. Our first target, our stop was once again right outside of the clouds. We'll start with the risk first, and that was a 7.5 point wide stop, with our first target being the 7.5, which was hit right here. And our second target was a 13 points target based off of the target line, which at the time was right here before the volatility box shifted, giving us both a T1 and a T2. However, as you probably were aware, this is when all of the news activity came out. We had tweets, we had essentially more China tariff news, and that was our cue to recognize that it's a Friday, and let's be a little bit more protective, especially considering that we made this kind of a move, a 16.5 point move in less than 5 minutes. And the only reason that our trade here actually triggered is because we already had our orders in place. And so that was our sign to then switch on over to the conservative volatility box for the rest of the day and be a little bit more cautious and recognize that, hey, this is a Friday. Before we switch on over to the conservative volatility box, I'll go through the first trade in the Dow as well, which same sort of a setup here. So if we take a look at the morning's activity, the first hour, we see that we were well inside of the aggressive volatility box's entry lines, giving us permission to use the aggressive volatility box, where our first trade was once again right here, giving us plenty of opportunity to get down. We also had a supply-demand edge indicator signal go on here for double confirmation. Our stop was outside of the volatility box, where 65 points stop. First target was once again the 65 points, which was hit in this red candle. And our second target, based off of the target line, was at 49 points, which was hit. No, it was actually 115 points, where the target line at the time was here. We did not hit that, and so our second contract broke even when we came right back up here and tested our entry. So we had T1 on the Dow only, but no T2. And finally, the NASDAQ futures. Same exact story once again. We had the first hour of the market open. We checked to see whether or not we breached either side's volatility box entry lines. On the aggressive, we did not, which gave us permission to use the aggressive volatility box. And our first entry was once again right here, where we had plenty of time to get in. Our stop was 25 points outside of the clouds. First target was once again the 25 points. And the second target was where the target line was before it shifted up, as you see right now. And at that time, the target line was right here at 49 points, giving us both a T1 and a T2 on our first trade in the NASDAQ futures. So to sum up, at this point, essentially the way we're seeing the market is in a 5-minute candle, single 5-minute candle. We've had a lot of news come out. We've had volatility essentially kick up a notch. We've hit T1 and T2 on the S&P and the NASDAQ futures. The Dow futures have stopped us out, and we've now switched on over to the conservative volatility box looking for entries, knowing that it's a Friday, being a little bit more cautious, and knowing that we're in a tweet storm environment like we like to be on some Fridays at least. And so that was our sign to switch on over to the conservative volatility box. Also, we'll just touch on the Russell. The Russell is the one indice that did not give us an entry at that 7 o'clock hour, as you can see right here. Our entry actually came a little bit later, and the Russell was the essential one ticker that was respecting the aggressive volatility box. Our range here was not even close to the aggressive volatility box's range, as you can see. And this was our one indice that gave us the okay to be a little bit more aggressive and still continue to use the aggressive volatility box, especially when you compared it side by side with 3 other indice markets. Okay, so once we had Powell's comments come out here, this essentially prompted us to now switch on over to the conservative volatility box after we saw the sort of volatility that we expected out of it and the kind of volatility that was actually delivered. So here now we have the conservative volatility box plotted. The conservative volatility box plotted, along with still the supply and demand edge indicator, which, as you can see so far on the S&P futures, there was a signal to go long here, which took us right into our conservative volatility box. And now this was our second entry on the S&P futures, where we also had double confirmation with the supply demand edge indicator. And so our entry was right here at this entry line. Our stop was outside of the volatility box, 7.5 points wide, with our first target being the 7.5 hit right here. And our second target was 17 points, which was the actual target line hit once we had the frenzy of the tweet storms, and that took us into the remainder of the day's volatility. So here we had T1 and T2 hit. However, after our T2 was hit, this then took us into our conservative volatility box's entry line on the long side, which actually would have been exactly where it is, and our clouds would have been right outside. This trade was stopped out, where we risked 5.5 points to try and make the 5.5, which we unfortunately just blew straight through. And that was our last trade, where both contracts were stopped out for 5.5. And really, that was our sign to take the rest of the day off, protect our gains. We were up nicely on the day. And so we'll take this sort of drastic volatility as our sign to sit out the remainder, protect our gains, and close out the week on a nice winning note. Switching over to the NASDAQ futures, the same sort of story. Once again, double confirmation with the supply demand edge kicking in. Our entry was right here at our entry line. Our stop, let's go ahead and actually try it. So our entry was at the entry line. Our stop was outside of the volatility box, where we gave it 25 points of room, once again, to breathe. Our first target was the 25, and our second target was determined by the target line, which was 49 points. Once again, both targets were hit, and this took us into our third entry on the NASDAQ futures, which once again, just like the S&P, was a stop. Our stop was right outside of the volatility box. We gave it 20 points of room, and our first target was the 20 points, which was not hit. And so once again, that trade stopped out. and this was yet another signal for us to just stop trading for the day. Switching over to the Dow futures, same exact story once again. Probably sound like a broken record at this point. Our entry was right here at the entry line. We also had confirmation from our supply demand edge indicator on the Dow futures. Our stop was outside of the volatility box, gave it 65 points of room to breathe. First target was a 65. The second was at the target line, which was 138 points. Both were hit, giving us our second entry essentially on the Dow futures, both T1 and T2. And this took us into our final entry on the Dow futures, which once again was a stop out. We risked 45 points, so our entry was once again at the entry line, and our stop was 45 points wide. And once again, our first target was 45 points wide, or 45 points. We didn't hit T1. Instead, we ended up hitting our stop, and this took us out of the Dow futures. So once again, this was our signal to protect our gains, go into the close. And lastly, we'll touch on the Russell futures before we talk about the market on close imbalance headed into today's close. So on the Russell, we still had permission to use the aggressive volatility box. It was the only one where price action was contained, even with Powell's comments. And we've noticed this often, that Powell's comments affect the other three indices a bit more than the Russell futures. And so our entry was once again at the entry line, stop right outside of the volatility box clouds. We gave this 4.5 points of room. First target was the 4.5. Second target was 7.8 at the target line. Both were hit, which then took us into our next trade, which once again was a stop out. And finally, to talk about the market on close numbers for today. So yesterday we had a sell side imbalance of 1 billion headed into the close. Today that number was 2 billion. And so that is pretty drastic, just to essentially put that into perspective. And we expected a sell-off into the close, which is essentially what we got. So we had these numbers starting around noon, and we puked into the close until we tried to get some sort of a rally going, recovering most of what we fell in the final 10 minutes of trading on Friday. And that, once again, demonstrates the point of why Fridays are wonky, Fridays are weird, and trading the close on Fridays is one of my least favorite things to do, which I don't ever actually do. It's not something I like to participate in. But the sell side imbalance was quite drastic today. And so if you did take advantage of that 2 billion sell side, you had one last trade that was not from the volatility box, but rather just a market on close trade. So with that, we were able to conclude the week on a really nice winning note. We ended the week up $4,500. We were able to redeem today in our trading activity, despite having 4 losses in each one of these futures, putting us at a monthly total of a little bit more than 13 grand. I think we're at 13.4, 13.5, which I'll take for the month of August so far. If you'd like to sign up for the volatility box and start participating, start observing these models, and really have access to start trading with an edge at the edge, then go ahead and visit our website at tosindicators.com/volatilitybox. If not, we hope you have a great weekend. We'll be putting out another tutorial over the weekend, so stay on the lookout for that. And we look forward to another exciting week of trading next week.